Alright, hello and welcome to Camel Finance. I'm your boy Camel and we are back following our little fishing trip yesterday. For those of you that are interested, we did catch a few fish. I think I caught 4 or 5 sea bass, but none big enough to take home. In the UK, there's a legal limit of 42 centimeters. Unfortunately, no sea bass for dinner. However, I had a nice time with my brother and that is really what it's about, isn't it? So I've just this morning grabbed the CPI data and I did see the headlines, the news headlines yesterday. I just checked them quickly on my phone. I do like to, when I'm fishing, I don't like to be like looking at charts, and I like to try and actually get away from life and enjoy just taking in the scenery and being with my brother and stuff. Anyway, the point is, I read these headlines in the news that were like, oh, hot CPI print. And I thought, oh no. But I've got up this morning and grabbed the CPI data, and actually it's not as hot as the news seemed to make out. So we came in for headline year over year at 3.7, which is marginally above what was expected at 3.6. We, on a month over month basis, we're right in line with forecast. I know it's, again, hotter than the prior month's readout, but because of the way it's calculated, it was never really going to be massively, significantly under, in my opinion. And I was consistent in saying that in the lead up. US core CPI year over year was right in line with forecast. And this is the key thing, because the Fed reacts to core, remember, 4.3% was significantly below the 4.7% of the prior readout. So core CPI is going down, and the core month over month was only again marginally above the prior readout and the forecast. So overall, I saw a lot of headlines for a hot CPI, sticky inflation, all of this kind of nonsense. And realistically, we are more or less in line with expectations. There's a couple of things I want to cover today regarding this CPI stuff. First of all, let's keep in mind that excluding shelter, which is one of the biggest components of the CPI basket, the rest of the core inflation basket was up just 2.2%. Shelter is also a massive laggard. It's the biggest lagging piece of data in the basket, remember. So let me say this again. Excluding shelter, the rest of core inflation basket was up just 2.2% from a year earlier in August, making the smallest 12-month increase since March of 2021. The emerging deceleration in rental inflation is so key because aside from it being the largest category in core inflation, it's really the last thing that is yet to come down. Again, like I said, it's the biggest laggard in the basket. Whilst the headlines are very scary, whilst a lot of people are going to be quick to tell you inflation's sticky and all of this bearish stuff, just remember that CPI is still coming down. It's still, whilst the Fed is playing it on hard mode, inflation is likely done. Okay, inflation is likely done, and we can see that because remember yesterday when I showed you the 93% probability for a pause in rate hikes? This is now sitting at 97% probability that we're going to see a pause. Now, I always say this, don't I? When we are this skewed to one way or the other, it's very, very seldom incorrect. So the fact we got 97% probability of seeing a pause at the next meeting right here tells me we are almost certainly going to see a pause at the next meeting. So hopping into my melt up chart, you can see that we've been expecting the pause. We've been saying all along, we've been consistently calling that if we were to get the pause, that would ignite the last blow off top portion of the rally, because the institutional traders will front run the rate cut cycle, which is to follow. And of course, the rate cutting historically is the bearish pivot. A pivot from a hiking cycle into a pause is bullish, but then the pivot from a pause to a cutting cycle is very bearish, historically speaking. It's another thing retail get wrong a lot. Until the chart tells me something otherwise, I remain confident that we are going to continue to see this play out. We are about to run the all-time highs. Now, in validation for this would be taking out the lows. Then we would have to probably build a much bigger basing structure before we can move higher. And we would also have to be open to seeing a downtrend emerge where this really is the top for this cycle. However, as it stands, I see no reason why we can't continue to move higher as the market continues to front run that pause, because the markets are going to want to print the all-time highs before the Fed enters the cutting cycle. That's been the thesis all along. The OGs and the triple OGs of this channel will already be well aware of this. And it reminds me of my favorite investing meme, this whole bell curve for IQ, right? So it really is as simple as this. Just buy and go fishing on the one hand, right? It seems so dumb. Buy the stuff and go fishing and everything's going to be okay. Everyone is stuck in this middle, aren't they? But the macro, but everything looks so bad, but World War III, but you know, the list goes on and on and on. But then of course at the other end of the extreme, there's buy and go fishing. And meanwhile, options traders are as bearish as they were back in the March 20 crash, okay? You can see this here with the put to call ratio, and they are record amounts of shorts, record amounts of bets against the market, betting that the market is going to go lower. And whenever we've seen these kind of levels before, the market always moves to harm the most amount of participants. So it tells us to keep an open mind about better than expected outcomes, doesn't it? For me, like I said, it all comes back to this. I still think CPI is probably going to come down. I'm going to cover oil a bit later on. And there's a lot of oil balls out there at the moment. A lot of people have been pointing at energy and saying, yeah, well, energy is going to run and that means it's going to mess up CPI and CPI is not going to come down. In fact, let's just jump into this oil chart now so I can make this point. There's a lot of people looking at this oil chart and thinking that this is just the start and that CPI is going to be really sticky. And Camel is here to tell you, I think we're going to run slightly higher, break down from here. In fact, I'm going to draw one of my amazing squiggles, right? Break down here, do something like this and break down here. And then I think oil is going to crash. And this is going to drive the final portion of that deflationary bust. Remember, going back to this S&P 500 melt up chart, okay? You see, we run the all-time high and then we have a big deflationary bust. So if that's going to be the case, what would it look like? Well, I think it's going to look something like this. I'm not in the camp of people that thinks oil is going to continue and set new highs or remain highly elevated for a long time. And there's a reason for this, okay? The big reason is, and again, if you've been here before, if you've been here for a while, you will have seen me draw this pendulum a bunch of times, okay? Inflation on one side, deflation on the other. We went from a highly inflationary environment, the pendulum swung, and of course, once a pendulum is set in motion, it continues to swing to the other side. So right now, we're somewhere in this neighborhood, aren't we? This Goldilocks zone, where things don't look so bad. Inflation seems to have been coming off up until the prior print. I know we've had a little bit of a wobble for now, but inflation seems to be coming down for most of the year. We also know that we're closer to this pause than ever before, okay? So interest rate issues almost starting to disappear now. And inarguably, the market this year, the stock market, ever since the lows in October, has had a phenomenal run across the board, okay? Every single one of those US equity markets has done really well. And even though bearish sentiment is there with Bitcoin, Bitcoin is still 70 odd % off of its lows. It was 100% off of its lows at the peak. And there's still plenty of months left in the year for Bitcoin to continue to do Bitcoin things. So again, we still remain in this Goldilocks zone, but make no mistake about it, we have swung from the highly inflationary environment towards deflation. So if we continue to do this, that tells me that we are going to see the deflationary bust. That tells me that we are going to get this big meltdown show up for the S&P 500, just like this melt up chart has been showing over and over and over again, all the way since back in this neighborhood right here. And of course, if we're going to have a deflationary bust, then we're going to see energy prices roll over and bust as well. So not only am I pretty confident about this call, I'm calling out a short opportunity from around the 90 to 95 neighborhood. And if Camel can get the first part of this red squiggle to show up and then a trend line breakdown, I will be taking a short on oil and targeting way below these lows. I will be targeting somewhere in the probably the $40 a barrel. Now, this is going to be an incredibly contrarian view. A lot of people are going to think, no way, oil's about to run to new highs. And it might, okay? It might. But I'm pretty confident because of that pendulum, because of the fact we know there's probably a deflationary bust, there's going to be credit events as well. Remember, these interest rates have done massively permanent damage to banks. The banks are still sat on massive unrealized losses from holding all of these bonds. Remember, it was just about a year ago to the month that the UK's pension funds got margin called. So the credit event risk is there. Okay, the deflationary bust risk is there. And again, we go back to this melt up chart. It's been there the whole time. Never once did I draw this melt up without the crash afterwards. We've had this stuff marked in pink for what to do during the crash and all of the nasty stuff that's going to show up from the crash. And that is to be determined. We still need to take things one day at a time. But like I said, consider this a call out. Consider this a big macro short opportunity that I am looking at for oil. It's been a long time since I traded oil. Over the years, there's been times where this was my primary market to trade. This and gold for many years were the only two things I traded practically. But inarguably this year, the money to be made has been in these NASDAQ trades, right? So taking these trades from the breakouts and riding them all the way up here, we're now back in. And if we go to all-time highs, you know, I will have caught the vast majority of this entire move. This is where the focus has been this year, along with Bitcoin. If Bitcoin can continue to do Bitcoin things, that would have been the correct call as well. But now I'm starting to think to myself that the big trades towards the end of this year are going to be oil rolling over and coming significantly below this low cluster right here. So anyway, I still think we're going to go deflationary bust. I still think we're going to get that deflation pendulum swing that I keep drawing over and over again. And as such, to the people that keep asking me to cover oil, this is how I see it. A bit higher, a breakdown, the secondary breakdown, and a big crash as we move in towards that deflationary bust. So as ever, one day at a time, but I still think inflation is going to continue to come off. I think the market knows that, and we can see that right here. They know the Fed is done hiking, don't they? So there's probably a bunch of people out there confused, thinking, well, how come inflation hasn't come down significantly, but we're still going to see a pause? Well, because the market is smarter than everyone else. The market knows what's going on, and what's going on is the Fed is done, and we're going to enter this deflation as the shelter portion catches up, as energy begins to roll over, and then the Fed is going to be forced to cut. And of course, what happens when the Fed is forced to cut? Well, we get the top come in for the equity markets. Do they cut here? So all the stars still align pretty nicely, I think. And I especially like my odds since the majority of retail is betting against this current market. Over in the world of Bitcoin, Coinbase is about to implement Lightning. Notice how new address momentum down the bottom here. Okay, when we're in these bear market zones, we then get a nice uptick and an uptrend that marks the top eventually with a giant spike. We get the same thing out of this bear market, right? We get a spike, an uptrend, and then a blow off top kind of, and that marks the bear market at the top, right? Now, notice we've gotten back and above, and we are starting a new uptrend. As Bitcoin continues to be adopted, more and more addresses come online. Is it reasonable to expect something like this to unfold? Quite possibly. It seems pretty reasonable to me. And whilst I've been beating the same drum over and over and over again, the facts are the facts. This would be the 25k level denoted right around here. You can see we've got an accumulation below, a break above, 2 retests before moving higher into reaccumulation, and away we go. Where are we today? Well, of course, we have had all of the bottom formation. We have had the breakout, 1 retest, 2 retests, looking for something like this to unfold, right? I've said it so many times, it is malpractice to be bearish above 25k Bitcoin. So here's a dollar. Have we got one final push up to 106 before it can roll over, or is this the end? Have we already seen the top, and is this trendline breakdown coming? That's to be determined. We'll keep an eye on it this week, of course. PPI data out today, so that will be a big factor. Interesting to see if the 10-year yield is actually going to break down on a pause following next week. So this is going to be the big chart that I want to follow as of next week, especially after the FOMC when we get the rate hike decision. Notice how the line in the sand, this blue upper sloping support line, is still holding. Notice how we are still above the initial repair. So a little bit more to go before we can break out of here and confirm that we really are in a roaring bull market. And believe me, if the Fed pauses next month, then history is on our side to see a face melting rally into the end of the year. Same is true of the Nasdaq. Nasdaq looks even better, doesn't it? So we've got this breakout retest, resumption, hard retest, outside retest again, and looking for resumption higher, still above this yellow upward sloping support line. And it's the same deal, isn't it? All the while we're above there, the thing is bullish. Dow Jones still refusing to break out, but maybe this week or next week I would expect to see this. I do think this thing is going to break out, and I do think it's going a lot higher beyond its prior all-time high, as I've been saying over and over again. Notice how the VIX down on a 13 handle towards the range lows. I would think, particularly if we get that pause, we are going to see this bleed all the way down to the 8-ish region, and then from there it should be time to start looking for reversals and major upsides from the VIX. Lastly, Bitcoin still probably in one of these sideways consolidation fractals until that 60-day cycle low is due around the 19th or 20th of October. So a bit more chop, all the while we're above 25k. You know the deal, right? The thing is bullish, whether you want to accept it or not. Below 25k, and I start to change my stance and become a lot more bearish. Here's Coinbase, so still kind of going this way, isn't it? Same is true of MicroStrategy, still kind of going this way, isn't it? Riot still hanging on to this trend line barely, so until we're invalidated by being stopped out, we'll continue to push the trade. And this second position for Marathon was stopped out yesterday, so we will put this to the side. We will see if we can recover. If not, then we will just have to wait and see what happens going forward. For now, though, it is undeniably below the upward sloping trend line on multiple daily closes. If it can get back above this downward sloping red resistance line right here, then perhaps we could see this yellow squiggle occur, something like this. But for now, we'll get out of the way of this one, and we'll just remain with the rest of our crypto positioning. So let's see how the rest of the week goes. So far, I don't think anything is wildly out of whack. I don't think anything is too far from the expectation. I still think, like I said, that melt up chart is in play. I still think Bitcoin's bullish above 25k. So unfortunately, it's not very exciting, but it is what it is. And we continue to take it one day at a time, as always. In the meantime, look after yourselves. Take care from me. All the best. Cheers. Bye.